MCF to BTC, how oil and gas companies are mining Bitcoin from flare gas. Welcome to the Blue Hawk Energy Report, the podcast where we explore cutting-edge solutions transforming the energy and Bitcoin sectors. I'm your host, Derek Branson, and today we're diving into a revolutionary concept that's turning environmental liability into profitable assets. What if I told you that oil and gas companies are literally burning away $1.17 billion every single year? And what if I told you there's a way to capture that waste and turn it into Bitcoin revenue while helping the environment? Today, we're exploring how flare gas, that flame you see burning at oil and gas sites, is being converted into Bitcoin mining operations, creating immediate revenue from what was previously pure waste. The $1.17 billion problem. Let's start with the scope of this problem. Every year, oil and gas companies across America flare, or simply burn off, natural gas worth over $1 billion. That's gas that could power homes, generate electricity, or, as we'll discover today, mine Bitcoin. Why does this happen? Well, when oil companies drill for oil, natural gas often comes up as a byproduct. In remote locations where there's no pipeline infrastructure to transport this gas to market, companies have traditionally had just one option: burn it off through flaring. This isn't just wasteful. It's expensive. Companies pay environmental compliance costs, face regulatory pressure, and miss out on potential revenue streams. Plus, there's the ESG reporting requirements that investors increasingly demand. But here's where innovation meets opportunity. The Bitcoin mining solution. Enter mobile Bitcoin mining. Companies like Blue Hawk Energy Solutions have developed a game-changing approach. Instead of flaring that stranded gas, why not use it to power Bitcoin mining operations right at the wellhead? Here's how it works. A natural gas generator converts the wellhead gas directly into electricity. That electricity powers specialized computers called ASIC miners, housed in weatherproof containers designed for harsh oil field conditions. These miners solve complex mathematical problems to verify Bitcoin transactions and earn Bitcoin as rewards. The beauty of this system? It's completely mobile and modular. A shipping container-sized mining unit can be deployed at remote sites, connected to the gas supply, and start generating revenue within weeks. The compelling economics. Now let's talk numbers, because this is where it gets really interesting. A typical 1 megawatt flare gas mining operation requires about $2.7 million in initial investment. That includes the mining container, ASIC miners, generator, and all electrical infrastructure. But here's the kicker. This operation can generate Bitcoin worth $1 million or more annually, depending on Bitcoin prices and network conditions. We're talking about potentially 24-month payback periods, with ongoing revenue for years. Compare this to simply buying Bitcoin directly. If you invest $3 million in Bitcoin today, you own $3 million worth of Bitcoin. But if you invest that same $3 million in a mining operation, you could potentially mine Bitcoin worth $4.5 million over 3 years and $7 million over 5 years. That's a 150% better return over 3 years and 266% better over 5 years compared to direct Bitcoin investment. Beyond just revenue, the tax advantages. But the benefits don't stop at revenue generation. There are significant tax advantages that make this even more attractive for businesses. Under Section 179 and bonus depreciation rules, companies can often deduct 100% of their equipment costs in the first year. So that $2.7 million investment? It could translate to immediate tax savings of $700,000 to $900,000, depending on the company's tax bracket. This means companies are essentially getting paid to install revenue-generating equipment while solving an environmental problem. Environmental and operational benefits. From an environmental standpoint, this is a win-win-win scenario. Instead of burning gas and releasing CO2 directly into the atmosphere, companies are using that gas productively. While the generator still produces emissions, the overall environmental impact is often better than flaring. especially when you consider the productive use of the energy. Operationally, Bitcoin miners offer something unique to the electrical grid: flexible demand. Unlike most industrial equipment that needs to run constantly, Bitcoin miners can shut down instantly during peak demand periods or grid emergencies. This makes them valuable partners for electrical utilities managing grid stability. During normal conditions, miners provide a steady baseline demand that helps utilities predict and plan their generation needs. But when the grid is stressed, say during a Texas heat wave, mining operations can immediately reduce their power consumption, freeing up electricity for homes and essential services. Real-world implementation. So what does this look like in practice? Let me paint you a picture. Imagine a remote oil well in North Dakota. It's producing 315,000 cubic feet of natural gas per day as a byproduct of oil extraction. There's no pipeline for hundreds of miles, so traditionally, this gas would be flared. Instead, the operator partners with a Bitcoin mining company. They install a 1 megawatt generator and a 40-foot mining container with 300 ASIC miners. The gas that was being wasted now powers a 24/7 Bitcoin mining operation. The result? The oil company generates additional revenue from their waste product, reduces their environmental footprint, and potentially earns carbon credits. The mining operation produces Bitcoin at about 60 to 70% below market cost due to the extremely cheap energy source. Technical considerations. Now, this isn't as simple as just plugging in some computers. These operations require sophisticated engineering and ongoing maintenance. The gas composition matters tremendously. Pipeline-quality gas with high methane content works best. Gas with too much hydrogen sulfide can corrode equipment. Moisture can cause problems. That's why proper gas conditioning, filtering, dehydrating, and treating the gas is crucial for reliable operations. The mining equipment itself needs to handle harsh conditions. We're talking about containers that can operate in temperatures from minus 25 degrees Fahrenheit to over 100 degrees, with dust protection, humidity controls, and robust cooling systems. Remote monitoring is essential since these sites might be visited only weekly or bi-weekly. Modern systems can track everything from generator oil pressure to individual miner performance, with alerts sent via satellite internet to operations centers. Different approaches for different needs. Host, what's fascinating is how flexible this concept is. There are several business models depending on the situation. For companies that want maximum tax benefits and full control, they can own the entire operation. They buy the equipment, claim the depreciation, and keep all the Bitcoin mined. For companies that prefer lower upfront investment, there are revenue-sharing partnerships. The mining company provides equipment and expertise. The oil company provides gas and site access, and they split the Bitcoin revenue. Some companies even prefer power purchase agreements, where they convert their gas to electricity and sell it at premium rates to mining operators, creating predictable monthly revenue independent of Bitcoin price volatility. The broader impact. This trend is part of a larger movement toward waste energy utilization. We're seeing similar innovations with landfill methane being captured for Bitcoin mining, solar farms using excess capacity for mining operations, hydroelectric facilities mining with surplus power, even waste heat from data centers being captured for other uses. The common thread is turning waste into wealth while improving environmental outcomes. Challenges and considerations. Of course, this isn't without challenges. Bitcoin price volatility means revenue can fluctuate significantly. Regulatory landscapes are still evolving, with some areas more crypto-friendly than others. There are operational challenges, too. Generator maintenance in remote locations requires skilled technicians. Equipment can fail in harsh conditions. Internet connectivity via satellite can be expensive and sometimes unreliable. But perhaps the biggest challenge is simply awareness. Many oil and gas companies don't yet realize this opportunity exists, or they're hesitant about entering the cryptocurrency space. Success stories and market growth. The companies that have embraced this approach are seeing remarkable results. We're seeing everything from small 50-kilowatt operations at single wells to multi-megawatt deployments across entire fields. The economic impact is substantial. A recent study by the Perryman Group found that Bitcoin mining and related activities generate over $4.1 billion in annual economic benefits in the United States, supporting more than 31,000 jobs. Texas leads the way with $1.7 billion in annual gross product and over 12,000 jobs from Bitcoin mining activities. Other major states include Georgia, New York, and North Dakota, all areas with significant oil and gas production. The future outlook. Looking ahead, this trend is likely to accelerate. As Bitcoin continues gaining mainstream acceptance, more traditional energy companies are exploring mining opportunities. Technology improvements are making operations more efficient and reliable. New cooling techniques are reducing electricity consumption. Better generators are handling lower quality gas more effectively. From a regulatory standpoint, many states are actively encouraging this type of waste gas utilization. It aligns with environmental goals while creating economic activity in rural communities. Getting started. What companies need to know. For oil and gas companies considering this opportunity, here are the key steps. First, assess your gas supply. You need consistent gas flow and reasonable quality. Companies can help you analyze the BTU content, moisture levels, and contaminants to determine feasibility. Second, understand the economics for your specific situation. Factors like gas volume, power costs, and local electrical rates all impact profitability. Third, consider your business structure. Do you want to own and operate, partner with a mining company, or simply sell your gas to miners? Fourth, plan for the technical requirements. You'll need site preparation, electrical infrastructure, internet connectivity, and ongoing maintenance capabilities. Finally, ensure regulatory compliance. This includes environmental permits, tax planning, and coordination with mineral rights holders. The professional services market. Interestingly, this opportunity isn't limited to oil and gas companies. We're seeing growing interest from high-net-worth professionals, doctors, dentists, lawyers, and other business owners who want to invest in Bitcoin mining operations. For these investors, the appeal is the combination of superior returns and immediate tax benefits. A $2 million investment in a mining operation could potentially yield $4 million in Bitcoin over 3 years, while providing substantial first-year tax deductions through equipment depreciation. This creates opportunities for smaller distributed mining operations that aggregate multiple investors or serve professional markets. Innovation in action. What we're really talking about here is innovation at its finest. Taking a waste product, flare gas, and converting it into digital assets while improving environmental outcomes and creating jobs in rural communities. This is the kind of creative problem-solving that makes American energy companies global leaders. It's technology meeting tradition, environmental responsibility meeting profitability, and local innovation creating global impact. The competitive advantage. Companies that move early on this opportunity gain several advantages. They're monetizing assets that competitors are literally burning away. They're improving their environmental profile while generating revenue. And they're positioning themselves as innovative leaders in their industry. As more companies adopt this approach, the competitive advantage will shift to those who execute most effectively, finding the best sites, optimizing operations, and scaling efficiently. Call to action. The opportunity is clear. Billions of dollars in waste gas are burned annually, while Bitcoin mining offers a profitable alternative that benefits the environment, creates jobs, and generates substantial returns. For oil and gas companies, the question isn't whether this trend will continue. It's whether you'll be a leader or a follower. For investors and professionals seeking tax-advantaged investments with superior returns, Bitcoin mining offers a compelling alternative to traditional investment approaches. The technology exists, the business models are proven, the economics are compelling. What's needed now is awareness and action. Conclusion. Today we've explored how a simple idea, using waste gas to mine Bitcoin instead of burning it, is creating billions in economic value while improving environmental outcomes. From the $1.17 billion in annual flare gas waste to the 150% better returns compared to buying Bitcoin directly, the numbers tell a compelling story. But beyond the numbers, this represents something larger. American innovation turning challenges into opportunities, waste into wealth, and environmental problems into economic solutions. Whether you're an oil and gas executive, an investor, or simply someone interested in how technology is transforming traditional industries, this trend is worth watching and potentially worth participating in. The future of energy isn't just about finding new sources of power. It's about using existing resources more intelligently, more profitably, and more sustainably. And sometimes, that means turning the flame that's been burning away profits into the spark that ignites new opportunities. Thanks for joining us on Energy Innovation. If you found today's discussion valuable, please subscribe and share with colleagues who might benefit from learning about this opportunity. For more information about mobile Bitcoin mining and flare gas monetization, visit Blue Hawk Energy Solutions or consult with qualified professionals about how this approach might work for your specific situation. Until next time, keep innovating.